Okay, good morning, guys. How you doing, Bobby? Always in bright and early. Good to see you, mate. Welcome, welcome everyone. Now, again, just for TradingView people, just remember you're more than welcome to join us on the YouTube channel and subscribe to us on our YouTube channel. There'll be lots of material that we put up there aside from TradingView. That's just live streams or webinars we'll be doing or bits and pieces that might be of interest. So it's worth subscribing. You'll find all the details under our profile or on the back end of one of the alerts that we push up. So feel free to join us. Everyone else, welcome. Now, we're going to get stuck into it. Markets they are on a tear, and I think there's catching a lot of bears off guard. So it seems to be people, and I'm reading different areas, people are short this, short that, and they're just getting cleaned up. There is no reason whatsoever to be short this market at the moment. If you are, you're trying to pick the top, and I think if you are doing that, you've probably done it before and been caught out. So, just be careful with the strength in this market. Things can always go a lot further and harder than you ever expect, which is pretty much what this bull market's doing. So, for me, there's every reason why it should be down. We should have seen a bit of a sell-off. Things are stretched, massive levels of debts. But when you sort of, and the US dollar too is starting to think they want that. But is that people losing confidence in the US dollar because there's a flood of cash. But the thing is, with a flood of cash comes, you're going to put it somewhere. So it'll be interesting to see how it all goes. I mean, there's nowhere else. If they lose faith in the US dollar, whereas central banks are going to put their money, companies and all that sort of stuff, where are they going to put their money? If not the US dollar, the euro, the pound, yen? I don't think so. So it's kind of been buoyed by that, supported into the US. Now, with searching for yield, I mean, you're not going to put it in bonds. The bigger funds and things are not going to put it in bonds because there's such low yields, and I think they're staying low at the moment because it's hard to see inflation in the near term. Now, we'll see how that goes. I mean, that's the only place. If things are going up, you just keep piling in, and that seems to be what's happening at the moment. And there's probably a lot of extra buying pressure from people from staying at home, and you got the grants and all sorts of things, some extra money flowing in. And it may not be that it's a fairly thin market, I suspect. I'm not sure about the US, but I think things are starting to get a bit out of hand here as well. I think we're in a better position in Australia, but we'll see. We'll see. Now, first thing I'm going to go over is that dollar index, which you'll see on the screen now. It's entrenched in a downtrend. It has been since end of probably a couple of weeks ago, week or so ago. What are we now? Yeah, about a couple of weeks ago. The market has, it was sort of edging down, but we're in that support zone, just above the support zone around 98.50. It was fine, and it just basically was a sell-off. And I think that was actually about when markets really started getting a bit of kick on, and bears were getting squeezed out, starting to realize that you're on the wrong side of the market. So that US dollar is still grinding low. It's holding the trend nicely, holding the 50 and the 20 MA, so below. I don't see support, and this is on a real minor level, maybe a minor level at 96.40, and that's not really. When you look at support zones like that, it's not. You've got to realize what could be on the other side. Is there going to be stops on the other side? Is there going to be buyers willing to protect that zone? Now, with this flush lower, it's not really a zone as such. It's just where we may see some buying because the market's going to be stretched. It's already stretched at the moment on the dollar. So, the more stretched it gets, the more sort of a pullback, the deeper the pullback you probably get, or the suddenness of the pullback too. There may not be any warning. It may just pop, and that means everything related to that, the Aussie, the euro, the pound, markets, indices, if this pops hard, I would suspect it's going to be because of a safe haven buying than anything else. And if that's the case, then everything else is going to go with it, you would expect. That's the dollar. Let's get over to the Aussie. Currencies. So the Aussie and the euro, we'll just take a quick look at. Remember the pound now. The Aussie is well and truly on the tear as well. Don't know why that's not. Let's get over here. We'll start with the euro. Maybe that's where. Oh, there you go. Don't know why it's saved it on one chart and not the other. Now the Aussie, you can see this resistance zone that's come through. It's touched here a couple of times. It found some selling pressure here. A bit of selling there. Popped down, took out the lows. Had to go back up. It wasn't ready to go. Traded again, higher low. Once we got through, cleaned out a few late buyers and some sellers. Sorry. We turned around, smacked lower, and really squeezed out those buyers that built up through here. And that's when the sort of a trend started going. We found a bit of a base in here, lifted back up, retouched it again, and then fell apart. And that was, during the big sell-off, the market absolutely fell apart. US dollar spiked, Aussie dollar just dropped like a stone, and then we've bounced back ever since, along with equity markets. So this has been going in parallel to what's happening with equity markets. Now, if we're getting up towards a resistance zone at, say, 70.30, back up to these highs, are we going to react off it, or are we just going to continue to jam straight through it? If we go straight through it, I would suspect we're going to get some consolidation below. Generally, markets like to consolidate below a level. What that does is drag in some sellers and then turn around and just squeeze them back out and it blows straight through the level. But if it's just going to go up straight to test it, even just touch through it, I'm suspect that it's going to continue stronger. Again, it's going to be linked to what's happening in equity markets. If there's going to be a sell-off, is anything actually going to happen there? I mean, everything's been thrown at it in the way of negativity, yet nothing's happening. That makes sense. So we've got, riots, we've got pandemics, we've got, massive unemployment, massive debt levels, all these sorts of things. It couldn't get worse, really, and the market's still going up. And again, it's probably just where else are you going to put your money? Money has to flow somewhere, and where else is it going to go? And I think a lot of people are expecting inflation because of this, a lot more dollars coming into the system. Whether or not after reading a good article the other day, I don't think it's going to happen. And I tend to agree with them. Is it going to be kept on US banks' balance sheets or not? What's going to happen there? So, that's what we're looking at. The Aussie, just go to the euro. Euro is at it's not a major level either because it has spiked through that level previously, but it has found some selling pressure before. It might be an excuse to book some profits from sellers, but again, we'll see that's going to be US dollar linked, and US dollar still seems to be heading higher. So that would lead me to believe we're going to extend up to 113.85, which is it's probably another 100, just over 100, 150 points away, which could easily do. So it's got the momentum. There's definitely momentum on its side. There's no reason to sell it just yet. There's no reason to sell in what you'd want to be doing. You want to see it stall. You want to see some profit taking. But if it does pull back and build a base again, you'd be looking for a buy. If it sort of spikes lower and it starts to chop around and goes to retest the zone and fails at a lower level, that could be the selling opportunity we're looking for. All right, so we go to the pound. Pound is extended as well. You've got a minor level which coming in around 125.52, which is just holding that trend up. Or actually, it's down a bit lower, to be honest. No, sorry, it's here. What are we talking about? So this is the anchor to the trend up. It's just spiked lower, retested those highs, and it's just fading. So if it holds above that zone at 125, say 50, 53, 54, then expect it to extend up into this resistance zone. Sorry, stumbling a bit, trying to get it out quickly. So trying to get to that 26.42 area. I mean, it could blast through and then fall over. Now we're long this and this spike, pulled it back, and we missed out a lot, which is a shame. But again, you just get caught thinking the market's a bit stretched. There's going to be a bit of a pullback, and it just doesn't happen. And some of the setup, this wasn't really a setup again. It could have been a setup in here, but really on the 4-hourly time frame, it doesn't give us much. It was really whippy, and trying to keep out of that whip, out of the chop, is hard going. Now that was it. Let's get over to gold. Gold, we were talking about this yesterday. This is Aussie gold. So we weren't talking about this yesterday. We'll start with gold. Now, gold has tipped over. This is what we were talking about. This lower high that came into play yesterday, it was finding some weakness, and that was off that zone. So when it's sort of grinding up, and it flushes through, comes back down, finds minor lower high, finds some more selling, washes out that level again, washed out that high, and then failed from there. But what we were looking at is this uptrend starting to fail. Once it starts to fail here, you've got to be on the back foot or the front foot with selling. If you're long, just be careful with your risk. If you're looking for a short, be on the front foot and be watching for it. And we popped up, washed out the highs, and then basically dropped like a stone. And that could have been a selling opportunity just in there at 17.31. And then we got this lower high that came into play yesterday, and we really extended those losses. So any of the bulls that are sitting there watching, you always got gold bugs watching, ready to jump in. I don't think there's any reason just yet. I don't think it's repaired itself yet. I think it's long from it. We could be heading down to 1660 because we got through this rising support zone, and we just got through a minor support, or not really support, but a minor level at around 1693. And we just seem to be consolidating. We might pop up and then flush lower again and extend that losses down to 1660. So we'll see how that goes. It is getting more in the known rather than the unknown at the moment. When you were looking at it here, there would have been buyers jumping in that are not ready for that sell-off. And now that it has come about, the sell-off has come about, it's sort of a bit of a heads up. There's this weakness coming into gold. If you go to Aussie gold, Aussie gold is the reason why we saw a big sell-off into gold stocks yesterday into on the ASX. and probably going to continue today. That Aussie's still continuing higher, gold's continuing lower, so it's getting sold down. All right, so it's not what you want to see. You don't really want to see. It's a perfect scenario. If Aussie keeps heading higher, it's putting pressure on the downside. Then you've got also adding pressure to the downside is the fact that gold dropped. So that sell-off is probably going to continue today into gold stocks. You wouldn't expect them to be buoyed too much today. There's too much else that people could be jumping into. And in a bit of an unwind, I would expect into the gold stocks. So Aussie gold, they could be looking down to sort of that 2400 zone, support zone, and just see if it can react higher. But again, it's going to be linked to the Aussie dollar and obviously gold. Now, the indices, we'll see if we can get through a couple here. We've got the ASX. It did push through 59.54. I think it finished at 41. 59.41, so it finished right on that level there. Look, it's not a key level at all. It's the previous highs that just pushed through, which were here. It's just popped through and finished above those highs. It's only extended across here because, look, it could be a bit of a resistance zone. It's around the 50% fib of that move down, of the original move down, but it's not a hard and fast resistance zone. Okay, so anyone that's short from here would have been squeezed out. You would, if you're following this correctly, you're following the lower highs, lower high here, lower high here, lower high. So there's no real stops to be triggered. It's just a level where, okay, it could be a level for some selling pressure to come in, or more, not really for selling pressure. You wouldn't be selling in this with this price action. You'd be exiting some longs potentially, but after today, I would expect that to be about 100 points higher. To be honest, we'll see how it goes today. Could be a big blowout. We might get to that extension around 62.70. Which is not far off the all-time highs. Yeah, but it'd be interesting. Sooner or later, this run-up has got to run out of steam. It's just, trying to pick the top is really a risky business. Right? So you really just got to let the market show you. And the problem is, if this starts to tip over, it might just come hard and fast, and a lot of people won't be expecting it, and it's just going to create that escalation or that, that complete drop, I would expect. But we'll see. Dow still extending highs, whereas the all-time highs, 29.60. So it's regained a lot of lost ground from that sell-off. Same with the S&P. The S&P, they are extended. Both of them extended, but they have been extended before. You've seen extensions, bit of a pullback, sitting on the MAs, extend higher again. So the flow is up, the momentum's up, and don't fight the trend. Nasdaq is right near all-time highs. So it'd be interesting to see what that does. Whether I wouldn't be surprised if it blasts through and potentially we get some selling. But again, it just depends what the overall market's doing. There's no reason to sell if the markets are grinding higher. All right, so that's about all I wanted to get through today. If there's any questions, if there's anything I might have missed out you want to talk more about, just send us an email to support@tradesetup.com.au. Have a great day. I haven't gone through the Hang Seng actually. Let's just take a look. I didn't really prepare that today. There is a big zone up here, which is just plowed into, and the markets are actually up now. I'm just watching, I think the Dow has jammed higher, again, so it did the exact same thing yesterday. It's just been powered up in a thin market overnight. So the US overnight market, which is our Asian session, European session, it been powering higher in the Asian session, just been ramped up and straight from the open. And then, and then flowing into the European session, gets everyone excited again. Again, go with the flow, gets them excited. Markets are up, come into the open, and off they go. So we'll see if that continues the same sort of theme today. We've got payrolls out tomorrow night. They had unemployment data out or employment data out last night, so they've lost more jobs, but not as much as expected, which is probably supporting the market a bit. And that would lead into payrolls tomorrow night in the US, which is a big number. So we'll see what happens there. It could be the trigger for a sell-off, some gains locked away. The way the markets have been, it may not be. All right, guys, thanks for joining us. We'll speak to you again soon. Cheers, bye.